Hello and welcome to the first episode of Realty Insights Podcast, where we bring you the latest news and analysis on the real estate market in Saudi Arabia and beyond. I'm your host, and today we're going to talk about the recently released CBRE Saudi Arabia Real Estate Market Review for the third quarter of 2022, as well as the macroeconomic indicators that affect the real estate market. So, let's dive in and see what the report has to say. First, let's look at the macroeconomic situation in Saudi Arabia. According to the report, the kingdom's GDP is estimated to have increased by 8.6% in Q3 2022 compared to the same period last year. This is mainly driven by the recovery of the oil sector, which grew by 14.5%, as well as the non-oil sector, which grew by 5.6%. The report also projects that the headline GDP will rise by 7.9% by the end of 2022. This is a positive sign for the real estate market, as it indicates a strong economic momentum and consumer confidence. The report also highlights the improvement in the employment situation in Saudi Arabia. The total employment level stands at 3.9% above the pre-pandemic level, with the private sector adding more than 400,000 jobs in the first 9 months of 2022. The report also notes that the Saudi Arabia's Purchasing Managers Index PMI, which measures the activity level of the non-oil private sector, remains in the expansionary territory, with a 57-point reading in September 2022. This suggests that the business conditions and demand are improving in the kingdom. Now, let's move on to the office sector, which is one of the key segments of the real estate market. The report shows that the office market in Saudi Arabia remains centered towards Riyadh, despite the lack of availability of quality stock. The occupancy levels in Riyadh have reached 99.0% and 98.7% for Grade A and Grade B stock respectively. This has led to an increase in rental rates, where the average Grade A and Grade B rents in Riyadh increased by 5.9% and 3.5% respectively. In there to September 2022, the report also reveals that there is an increase in occupier requirements in Jeddah and to a lesser degree in Dammam and Khobar, where the office market is more fragmented and competitive. In Jeddah, the demand is mainly driven by the serviced office offerings, which offer flexibility and convenience to the tenants. The average Grade A rents in Jeddah increased by 8.2% in the year to September 2022, while Grade B rents remained stable. In the eastern province, both Dammam and Khobar registered improvements in Grade A rents, with 3.9% and 8.2% increases respectively over the same period. The report also provides some insights into the future supply and demand dynamics of the office sector. It estimates that around 1.1 million square meters of office space will be delivered across the kingdom by 2024, with Riyadh accounting for 63% of the total supply. However, the report also cautions that the delivery timelines may be subject to delays due to the impact of the pandemic and the construction challenges. On the demand side, the report expects that the office sector will continue to benefit from the government initiatives and reforms, such as the Saudi Vision 2030, the National Transformation Program, the Public Investment Fund projects, and the GIGA projects, which will create new opportunities and attract more investments and businesses to the kingdom. Next, let's take a look at the residential sector, which is another important segment of the real estate market. The report indicates that the residential transaction volumes in Saudi Arabia fell by 15.5% in Q3 2022, compared to a year earlier, with the total value of transactions also slightly decreasing by 0.8%. The report attributes this decline to the seasonal factors, such as the summer holidays and the Hajj season. as well as the tightening of the mortgage regulations by the Saudi Central Bank, which reduced the loan-to-value ratio from 90% to 85% for the first home buyers. The report also shows that the number and value of mortgage contracts granted in Q3 2022 decreased by 15.9% and 12.7% respectively compared to the same period last year. However, the report also notes that the mortgage market remains robust, as the total number and value of mortgage contracts granted in the first 9 months of 2022 increased by 19.4% and 25.9% respectively compared to the same period in 2021. The report also expects that the mortgage market will continue to grow, as the government supports the home ownership goals of the Saudi Vision 2030, which aims to increase the home ownership rate from 47% in 2016 to 70% by 2030. The report also analyzes the price trends of the residential sector, which vary across the regions and the property types. The report reveals that the average apartment prices across Saudi Arabia increased by 7.8% in the year to September 2022, with prices in Riyadh, Jeddah, Dammam, and Khobar increasing by 13.1%, 8.9%, 5.6%, and 3.7% respectively. The report attributes this increase to the limited supply of quality apartments, the high demand from the young and middle-income segments, and the availability of affordable financing options. On the other hand, the average villa prices across Saudi Arabia decreased by 1.4% in the year to September 2022, with prices in Riyadh, Jeddah, Dammam, and Khobar decreasing by 2.1%, 1.8%, 0.3%, and 0.9% respectively. The report explains that this decrease is due to the oversupply of villas, the preference for smaller and more efficient units, and the high maintenance costs of villas. The report also provides some forecasts for the future supply and demand of the residential sector. It estimates that around 1.4 million residential units will be delivered across the kingdom by 2024, with Riyadh accounting for 40% of the total supply. However, the report also warns that the delivery timelines may be affected by the pandemic and the construct ion challenges. On the demand side, the report anticipates that the residential sector will continue to be supported by the population growth, the urbanization trend, the income growth, the government initiatives and subsidies, and the mortgage market development. Finally, let's examine the hospitality sector, which is the third segment of the real estate market covered by the report. The report shows that the hospitality sector in Saudi Arabia has witnessed a strong recovery in the second half of 2022, thanks to the rebound in religious tourism, the growth in entertainment, initiatives and conferences, and the easing of travel restrictions. The report reveals that the kingdom's average occupancy rate and average daily rate ADR increased by 19.5% and 17.6% respectively in the year-to-date to September 2022 compared to the same period last year. As a result, the revenue per available room RevPAR, which is a key indicator of the hotel performance, increased by 74.9% over the same period. The report also highlights the performance of the hospitality sector in the main cities of the kingdom. In Riyadh, the average occupancy rate improved by 5.0 percentage points, while the ADR and RevPAR increased by 23.4% and 35.1% respectively in the year to September 2022. Compared to the same period last year, the report attributes this improvement to the increase in business and leisure travel, as well as the hosting of several events and conferences such as the Future Investment Initiative, the Saudi Green Initiative, and the Riyadh Season. In Jeddah, the average occupancy rate improved by 28.3 percentage points, while the ADR and RevPAR increased by 15% and 123.4% respectively over the same period. The report explains that this improvement is due to the surge in religious tourism, as Jeddah is the gateway to the holy cities of Mecca and Medina, as well as the increase in domestic tourism, as Jeddah is a popular destination for its coastal attractions and cultural offerings. In the eastern province, the average occupancy rate improved by 18.0 percentage points, while the ADR and RevPAR increased by 11.6% and 83.4% respectively over the same period. The report notes that this improvement is due to the increase in business and leisure travel, as well as the hosting of several events and festivals such as the Sharqiya season, the Sharqiya Chamber Forum, and the Saudi Film Festival. The report also gives some insights into the future supply and demand of the hospitality sector. It estimates that around 63,000 hotel rooms will be delivered across the kingdom by 2024, with Riyadh accounting for 36% of the total supply. However, the report also cautions that the delivery timelines may be subject to delays due to the pandemic and the construction challenges. On the demand side, the report expects that the hospitality sector will continue to benefit from the government initiatives and reforms, such as the Saudi Vision 2030, the National Transformation Program, the Public Investment Fund projects, and the GIGA projects, which will create new opportunities and attract more tourists and visitors to the kingdom. The report also anticipates that the hospitality sector will benefit from the development of the domestic tourism market, which is expected to grow by 8% annually until 2024. That's all for today's episode of Realty Insights Podcast. I hope you enjoyed listening and learned something new about the real estate market in Saudi Arabia. If you want to read the full CBRE Saudi Arabia real estate market review for Q3 2022, you can find it in the description. Thank you for tuning in and stay tuned for the next episode, where we will discuss another interesting topic related to the real estate market. Until then, take care and goodbye.